Hola, buenas tardes. Cuando nos conocimos el año pasado, hablo nada de español. Pero ahora hablo suficiente, pero no como para explicar las cosas. Entonces, you'll have to put up with me for one more year of doing in English. Okay. Vale. I'm going to continue from Javi's example. He was mentioning, we talked about, I'll pull up that particular Darwin. And then I want to take us through the Darwin API in context. So I want to take it through, like, let's take a look at a Darwin, talk about the context of how it's different from a traditional asset, and then how the Darwin API helps us in establishing these differences and benefiting from them. So the difference between a traditional asset and a Darwin, because I'm a Darwin provider, so I can assess the differences much better than somebody who hasn't built a Darwin themselves, because I know I can criticize myself and hence see how the Darwin API helps me, right? So before the Darwin API existed, let's assume this is me, then over time, a traditional asset will have its periods of upwards movements and downwards movements, right? Call it a bull market and a bear market. How a Darwin asset is completely different from a traditional asset is that edge is defined, okay? So if somebody is succeeding trading an asset or a group of assets, short or long, doesn't matter, their edge will be definitive over time and you can see them, right? So let's imagine we're up till here and you look at this Darwin asset prior to this, you have a very clear view of this person's edge and this person is able to tackle his underlying asset profile really well. By the time he gets up until here, you've sort of developed an expectation of that there's a particular channel of behavior that this trader follows, and if it deviates too much from this channel, then over time I can make a very good, quick assessment of whether to remain invested in such an asset or not, until two things happen. The asset deteriorates too badly, or the asset eventually reverts into its previous channel of behavior, right? So how an asset like this differs from a traditional asset, that there is absolutely no way you can predict, nor do you have the information available to you on how to invest in a traditional asset this way. It's impossible. You can't look at a chart of the euro dollar and go, right, this is the right point because the bear market will end here. And this is the best point for me to start fading because the uptrend is about to exhaust here. We love coming up with theories on, the market is topping, or double and triple bottoms and pennants and flags and all sorts of other technical analysis stuff, right? So from this perspective, how do you access information both as a trader and as a Darwin investor? Where do you get this information in order for you to do one, two, or both things? One is there a way for you as a trader to get information from somewhere that allows you to tailor your actions as a trader? So let's take an example. You're a volatility trader, okay? You like trading news. And NFP comes and suddenly you're saying, okay, now's the time for me to enter. There is no other information, if you're a trader, other than news releases for you to make a decision on what to do going forward. But if you imagine you had information that allowed you to determine after the events come out whether you should enter or not based on what you see, right? There are several Darwin assets that trade volatility. Good Darwin assets will trade volatility well, right? So we have examples like, I'll pull up an example now. THA, yeah, THA. So THA is an example of a very good Darwin where the guy's core hypothesis is trading volatility. Major events or events that he perceives will generate volatility. This is a very experienced person. He knows the market volatility profile, and he trades a bunch of underlying assets and primarily news events. Let's assume I'm not him, which is obvious, but I would like to benefit from this information as a trader, right? As an investor, of course, I want to invest in this guy because it's clear that his behavior, his alpha, is consistent over time and it hasn't deteriorated yet. Yes? But if it were to have deteriorated, unlike a traditional asset where you start things like dollar cost averaging and you start creating yourself a new average position, in a Darwin's provider's case, it's immediately the has either lost his edge or his edge is experiencing trouble. Therefore, do not remain invested in the guy until you see clear evidence of his edge returning. All right? You can't do that with a traditional asset. Say this asset stopped here and suddenly it's down here. You would be very hesitant to remain invested in such an asset. Or you would do what we do with traditional assets, keep buying, and cost averaging yourself down to a better price. Where does the Darwin API come into this? Why am I talking about all of this? Because it's important to understand the key differences between a Darwin asset and a traditional asset in order to really benefit from investing in Darwin's algorithmically or via the API. Or you don't have to be an algorithmic trader to use the Darwin API. You could get together with people in the community who are already building tools with the Darwin API to express your ideas and have them develop them for you. The important thing to understand is that whereas in traditional assets, you have no, as I mentioned, the euro dollar example, let's assume this is the euro dollar. You will traditionally follow technical strategies that allow you to come up with some way of determining tops and bottoms or some way of getting back into the market at a better price or things like that. Whereas with the Darwin asset, the key difference here is that there's no bear or bull market context in a Darwin. You have either alpha existing or alpha deteriorating. At the point where alpha is deteriorating, unlike a traditional asset where you will try to average yourself back into a good price, let's assume this is not the euro dollar. Let's assume this is the S&P 500 and we follow the market hypothesis, general market hypothesis that markets over the long term, something like the S&P will make you money if you remain invested for decades, right? Invest in an S&P 500 tracker fund or something, let your money just stay and whatever, walk away. You can't follow the same principles with a Darwin asset because, and they're, not only can you not follow the same principles with a Darwin asset, it's an advantage to you to not follow the same principles with the Darwin asset because a Darwin asset, if it deteriorates, becomes an immediate candidate for exclusion. But while a Darwin asset is performing at its peak, it remains a good asset for continuous inclusion. We do not have the ability as normal traders without the Darwin API to get this information from the market. This guy is able to trade his underlying instruments better than us. He's able to short them, he's able to long them better than us in theory and in practice. So what is the better option for you? Would you rather trade his instruments, his assets, and his particular assets? Or would you rather invest in his performance? His performance, right? No brainer. But there has to be an exit clause somewhere. And you have to be able to define that exit clause. And you have to be able to monitor for that exit clause in order for you to sort of exit the party early or remain invested in the party. So the Darwin API allows us to achieve use cases like this, where algorithmically you can create portfolios of Darwins with a certain criteria that is a lot more flexible than the filters on our platform allow you to. I don't know how many of you are familiar with the filters on the Darwinex platform. Are you familiar with them? So with the Darwinex filters, for example, it's a visual interface over here, and we've got these metrics. All of these metrics are available in the Darwin API for you to manipulate. But a visual interface of this nature is a lot less flexible in terms of your creativity as opposed to the Darwin API. I'm not criticizing the interface. Of course, it's a beautiful looking interface and all of that, very nice and everything. But for me as an algorithmic trader, I'm sorry, I work for the company, I love the company, but it's shit for me. Like I can't do anything with it algorithmically. Therefore, the Darwin API comes into play where it allows us to explore multiple possibilities of creating various criteria for looking for alpha and figuring out ways to exit alpha you are already invested in, figuring out really interesting new indicators that you can come up with that you've never experimented with before, because of two things. One, the API didn't exist before, and two, information from other traders has never been accessible to other traders. Flow is not accessible. Your flow is not accessible to me. If we're both, let's assume you and I are both traders in the same brokerage, you don't know my flow, I don't know your flow. There's only one way you can see my behavior. If I have a Darwin on this platform whose quotes and other diagnostic attributes are visible to you via the API, then you can make an assessment, compare my behavior to other events in the market. You could run technical indicators on my behavior, right? You could take your very standard relative strength index or something of that nature, and you could apply it to my behavior being representative in my return series that you saw earlier on, my scores, things like that. You can therefore form a better picture of for how long or under what conditions to remain invested in me or to exit me. And me refers to like, sorry? Well, there's that option too coming out, to short me, all right? So that's in the pipeline. So when to go long or short me? Me meaning portfolio of Darwins, right, that you have. Me refers to any number of Darwins you might have. So you could come up with indicators, very interesting ones that I've built one for you. And to demonstrate that it's actually really easy to build them, I built it literally 15 minutes before we got here, which was an idea that Javi gave me several weeks ago, which was, imagine you're a trader, again, this volatility example. And Javi said to me back then, he's like, could you come up with a study with the Darwin API whereby you want to trade the news? And let's take a look at what a portfolio of the best volatility Darwins do before, during, and after news releases. Can we do that? So of course we can. So, so the Darwin API makes these things possible. You can come up with interesting ways to apply traditional statistics. That application of statistics is invariably very difficult to series that have so many different properties. There are random walk behaviors, there are mean reverting behaviors, there are all manner of other stochastic behaviors that we can't possibly predict in a traditional asset. But with a Darwin asset, it's completely different. You're not interested in all that low-level information. You clearly have alpha that is presenting itself as growth, or you have deterioration that is a breakaway from that growth, right? So at that point, you need to have A, the ability to form the criteria to remain in the growth or exit from the growth, and B, to be able to monitor it with some tool, aka API, that allows you to do that. So in terms of what the API allows you to do, it's a prerequisite that to use the API, of course, you need to have programming knowledge. But the nature of the API, the things that we've noticed after launching the beta phase of the API is guys like me who are programmers. People who have no programming background are coming up with ideas on our community forum, and other people who are programmers are coming up with extremely amazing tools using the Darwin API, and I'll show you one of them now, using other people's ideas. So there's like, let's imagine this room has 5 programmers and everybody else is not a programmer. So the previous sort of deterrent to most things API related was that, oh, I'm not a programmer, give me a tool, give me something visual, point and click stuff. But the Darwin API sort of allows this crowdsourcing of information, crowdsourcing of skills and tool sets, and allows you to share that information. So in terms of features, everything you see in terms of quote histories, any information you see on Darwin's listing on the Darwin Exchange is accessible, with the exception of a few things like we don't share equities. So underlying account trading equity exact, we don't share that sort of sensitive information. We don't share a time series of investment data by investor per investor, because that's sensitive information. What we do share is rolling equity, rolling AUM over time, number of investors in a Darwin over time. We share that sort of information. Anything you see on the platform in terms of quotes, scores, divergence, current capital, return, underlying metrics, etc., are accessible through the API. How does this make life more interesting for us as Darwin investors and traders who want to use this information for our own benefit? In a few ways. So let me open up. Investors, AUM in the Darwin. So not specific. So for example, you're investing in this guy. You might not want other people to know your exact investment in this guy. So we're not sharing that granular information. Because at some level that is investor IP and you don't want to compromise that. What I was mentioning in terms of, before I go into some use cases with the Darwin API, I want to sort of show you some tools, if I can see them. I can't load natural capital's solution. Took too long to respond. Ah, no. Yes and no. Doesn't matter. We'll wait for him to load. So let me run you through the Darwin API in terms of all its various components. In particular, what we're talking about at the moment is encapsulated in the Darwin Info API. The Darwin Info API is basically the programmer's interface to everything diagnostic related on the platform as regards to Darwin. So anything to do with scores, attributes, your current score, an entire history of your scores, your quotes, anything to do with, for instance, so we have data represented in two formats on any Darwin. You've got quotes in a line chart, and you've got candlestick charts. You can pull all that information via the API. You can also, I think the most important feature of the Info API here is the fact that you can filter for products by certain criteria. And this is probably one of the most important things that you as an investor or a trader need. So let's imagine, where's my coffee? Do I have an eraser? Ah, that's right. I love these blackboards. I haven't used them for ages. Takes me back to school. Where the teacher used to send me to the board, like, you didn't do your homework, go up there and make a fool of yourself. Okay. Okay, so we were on the subject of monitoring current performance of a portfolio of Darwins you've constructed. Or we were also discussing, well, the heavy use case of, hey, find me behaviors associated with good volatility trading Darwins. So the API, but particularly this filtration mechanism in the API here is relevant to our discussion. The API allows us to create dynamic filters where we can specify a criteria. Basically, the visual criteria chart, the setup filter chart that we saw earlier, it allows us to create infinite variations of criteria, feed them to the API and get a response of the number of Darwins that fit that criteria at that point in time. Right? So let's imagine traditionally, if you went to the platform and you said, oh, THA looks good, and LBS looks good, and this other guy NTI looks good, let me just take all these good guys and put them in a portfolio of buy and hold. That's your traditional approach that you're migrating over from your traditional investing mindset. But what if you could define certain criteria like the one we were talking about just now about volatility and look for Darwins that traditionally trade at certain times as opposed to like just having a certain profile. So let's imagine we want to look for all guys who trade NFP and trade them really well. So give me you don't need to be a programmer for this, give me the parameters for this. How do I find a Darwin? How do I find a Darwin who trades NFP? What's the first thing I will look at? Come on. The first thing I will look at is the time, right? The time of the NFP release. No? So it happens at time T. So I will look for events at a certain time that I know from my experience or from watching the news economic calendar that these events spike volatility like crazy. Then I will download. Let's imagine I want to download, I don't know anything about Darwin assets in my portfolio other than, let's imagine I want to filter by D-score. So I can tell the API, give me everything. Obviously, I want to invest in good guys. So give me everything, for example, that is greater than DS65 to start with, because I don't want to go through 4,000 Darwins and go through each and every person's time series and go, what do you do at 12:30, by the way? And you should find out what that time series looks like. So there are initial mechanisms I can do by filtering by a certain attribute. And to come up with interesting use cases like the volatility example, I can then take that time series, all the quotes for that portfolio of Darwins that I get out, and I can look at their behaviors at particular times. Like in this volatility example, I want to look at everybody's behavior before, during, and after the NFP. What does that benefit me with? Well, for two things. One, if the guy is good, then over his entire history, this portfolio will have performed well over its entire history, because the guys have demonstrated good pre, on, and post event behavior. That's one use case where you can create a volatility portfolio of the best guys using the API this way. The other is if you yourself are a volatility trader, but your success is, for example, not like Mr. THA's here. So you can use the API to curtail your own behavior based on the actions of other people. How does that work? For example, you see that the NFPs come out, and the three top guys, the THAs, LVSs, and another volatility guy. Let's just use THA and NTI. THA and LVS. The two major volatility playing guys have suddenly spiked up 5%, 6%. Right? And they're doing really, really well. As Javi mentioned earlier on in his part of this segment, liquidity providers are not sitting around waiting for you to extract funding from them. When there are huge movements that create asymmetries of this nature, there's only one source of information in the retail trading space that at the moment allows you to get access to this information in real time. And that is the Darwin API. Otherwise, there are other options. You'd have to go either be part of the operation somewhere where they have access to the flow. It would be illegal for you to tap that flow and use it. The other option is you're a Darwin API user who can see the quoted behavior of such traders pre, on, and post such market events. And that allows you to form conclusions on what you may or may not do next. If you know from general understanding of the markets or general market microstructure, you will understand that such movements are followed by either corrections or serious expansions, right? So if you as a trader would like to protect yourself or play it a bit more cautiously, your only source of information as a trader, not necessarily a Darwin provider. You don't have to be a Darwin provider to make use of the Darwin API. You can be a trader who can look at the behavior of people who trade like you by accessing their data through the Darwin API at events that you trade, and then form your own conclusions at that time in real time. Should I enter the market? The guys who trade like me, who trade the same events, just skyrocketed 6% each. Should I really be entering when they're already at 6%? Or should I wait for the no? Or should I, I see that the guys, I see that the NFP came out and was really, really good for the currency in question. But the guys who really traded well have suddenly gone, bam, they've gone 4%, 6% down. So you can infer that that guy's model, who's normally very good at predicting this market, has failed, and maybe this is a case for me to stay out of this situation. Okay? So you're a trader, you do not have access to this information anywhere else. You can't access this, if you don't have access to the API, you can't access this unless A, you are a market maker yourself, or B, you're in the ops team somewhere, illegally using this information, when you shouldn't be. There's only two other ways of doing this. So your only option is to access this information in a legal way where you are compensating the guy for accessing his information by paying him performance fees. You're not getting it for free. Information for sake of trading or for sake of investing in this guy. It's a completely legitimate, proper way of getting access to information that is otherwise impossible to get, and B, fairly compensating the guy whose information you are using in the first place. The other cool thing, several cool things, I don't have time for all the cool things, maybe I'll put a blog post up with additional cool things. Where, one of the things that you can do is so with DWZ's example that Javi gave you earlier, there's some fundamental mistakes traders are making since forever. there's some misconceptions that you can thwart by using the Darwin API. How? So, for instance, traders believe that the longer the backtest, as Javi mentioned earlier, with like people are using crazy long backtests and trying these massive strategies that are overfit at some point and they're failing, you've got no shot at using those sorts of strategies because alpha there is most likely exhausted. The concept of building a strategy that lasts for 20 years is more than likely dead, because you have to think in terms of A, microstructure, and B, in terms of how liquidity providers actually work. If you've got a backtest that looks like this, and you've got, let's say this is the guru backtest, yeah? And this is me. Which one is more appealing to you? Be honest. That one, no? Right? But this is my Darwin, and that's a backtest. Now which one looks more appealing to you? My one. Okay? So the concept of overfitting historically to data leads to solutions where we have more shorts, more Darwins to short than to go long. Okay? And the DWZ sort of nips this example in the bud by demonstrating that the most recent information is the most up-to-date information about your hypothesis at the present time. With DWZ, we took a rolling X-day window. I won't share specifics with you, but we took a rolling window of data and we deliberately made it short within reason and variable shortness over time, where we studied the impact of our hypothesis, which I can't share with you. But again, I'm telling you that the window was extremely short compared to a 20-year backtest. Very short. Very, very, very short. I built it, but I won't tell you. It's very, very short in hours. That's as much as I can tell you. But it's from years worth of information to hours. Are we saying that DWZ is like a killer asset and of course is going to look like this in 20 years? No. Well, what we are saying is that our hypothesis was centered around the most recent behavior in the market dictating what the market will do in future. And that is only possible to comprehend and do something about if you are not considering long periods of data where, imagine this time series, like this is like 1990, or let's say 1995, and you're like up to here, like 2018. Are you somebody really trying to tell me that the dynamics of the euro dollar in like 2003 still apply today? Come on. It's not possible. Like, so much has happened in between. You've had financial crises, you've had like regulation, you've had like all manner of things happen that have changed the dynamics of decision making at the market level. The Forex market, for instance, is one of the most efficient markets in the world for this very reason. Why am I talking about all of this? Well, what's the relationship with the Darwin API? The best traders know this. Some of the best traders you'll find will not be trading strategies that have been backtested for these long periods of time. Me included. I'm not saying I'm one of the best traders, but none of my strategies go beyond a few months in terms of rolling backtesting. None, zero. In particular, one that is suffering right now, ICX, is suffering because I've lost my edge in the short term. I'm telling you exactly what I've been discussing at the moment. Even that has a very short window. And you can decipher based on this information. You can get the Darwin API to tell you, okay, find me the rock stars over these short periods of time whose behaviors I can either study to tailor my own behavior or whose behaviors I can invest in. So I'm going to now sort of go to something slightly more complex, but it's with the intention of showing you the output. So I'm not going to bore you with the specifics. But this whole concept of take a criteria that is short term and see what it looks like. And is it something that I can invest in on a daily or other sort of, not daily is quite intense, but some short period of time. Okay, so the Darwin API's filtration mechanism, the particular endpoint that allows you to filter assets, where's my thing? Excuse me one moment while I pull up the interface. And I'll also show you, so I'll show you two things. One, I'll show you how it's possible to extract information, information in the sense, get me, for example, get me a list of Darwins who have had this much drawdown in the last this much time and have had this much return in the last this much time. And show me this every day, or show me this every certain period. And I want to invest in these guys on some sort of rolling short-term basis. How do I do that? You can't do that you can't do that without the API unless you're sitting with an Excel sheet and literally writing those values every single day, which will be very intense activity and it'll be prone to inaccuracy. But you can do that with the API. I'm just going to go over and give you an example. So I've defined a thing over here. Give me one second. So that was like 6 lines of code. Now, what is all of this? The criteria I've defined here in this very simple function is that show me all the Darwins at this point in time who have had in the last 6 months a drawdown of no less than 10%, who have had a return in the last month of no less than 5%, and I want you to order this list in terms of their return over the last 12-month period. So it's a pretty dense sort of query, right? You would have to set up a filter, monitor this filter on a daily basis, like write things down and do all sorts of things like that. I'm not saying this is some magic filter. I deliberately chose this filter as an example of how you can create a daily list. In my case, I'm doing this daily. So I want to get this list of Darwins. It's not very clear on this projector, but basically there's 74 or so Darwins in there who at this point in time, at this very timestamp, satisfy this criteria. Now I could create a short-term portfolio and run it on my demo where I'd like to exercise, or I'd like to test my short-term theory, which I can tell you is more powerful than doing long back tests. You could test this theory at no risk to you or anyone else by creating this filter, sending one call to the API every night or at whatever time of day you want, and say, get me this list of Darwins and buy them in my demo portfolio. Then tomorrow or at my next, let's say you're not doing daily, let's say you're doing weekly, or so every Monday afternoon or every Monday morning, get me this list of Darwins and buy them in my demo and forget about them till next Monday. Or every night at 9:30 past market open or 10:30 past market open, get me this list of Darwins, buy them in my demo, show me the evolution of my performance in my demo portfolio over time. You could achieve these sorts of things. You could also create filters using the API that satisfy, again, my favorite sort of volatility example we've been talking about. You could pre-select people who have demonstrated good performance. Good performance over time. And then inside those people, you could address some other criteria. For example, if you are somebody who's targeting short movements, as in small movements over time, then you're ideally if your curve is going to be good, if your returns are going to be good, ideally your timing has to be excellent, and you have to be very consistent in how you manage your risk, right? So those kinds of guys are typically people like, are you guys familiar with NTI? One of the Darwin's NTI on the platform? I'll show you his example. So NTI is an example of someone who fits this criteria. So, yes, please. So this is the API. The API is in state beta, and beta does not mean it's not usable. It's in a Beta just means we reserve the right to make changes. Okay, because people have already built tools. I've already built studies, and my colleagues in labs have done so many things. So those will all break if we make some crazy change. We're not going to make crazy changes. Beta just means that you can see more things added to it before it goes into state mature. That's all that beta implies. That's right. So this is an example of a Darwin where, for him to survive, because he targets very short-term movements, this guy needs to have excellent scores in open and close strategy, risk, positive and negative risk consistency, and duration consistency. So based on this information, by just looking at this guy and wanting to find guys like him, you can go over to the API and go, right, get me anybody who has a decent D-score, but also add additional filters that say, okay, give me OS and CS greater than 5 or greater than 6. Give me some R plus greater than 5 and R minus greater than 5 and DC greater than 5. Just by looking at one Darwin, you have all of this information in terms of criteria, and then go ahead into the API, use the API to create a daily portfolio or an X period portfolio based on your preference. Find me all these guys to invest in at so-and-so time, buy them into my demo portfolio, monitor the evolution of this guy over time. That's the active investing part. You can backtest this theory with the API as well. So you can take this criteria and you can go backtest over time from the very first Darwin. He's in fact the oldest Darwin we have. No, now we have older Darwins than NTI, but before NTI we had, before those guys showed up, NTI was the longest serving Darwin in Darwinex. But his history spans from 2013, 2012, 2013. Yeah. So I think he's 2012. 2012. Yeah, 2012. Okay, no, almost finished. I haven't put anyone to sleep, right? Oh, I hope not. Okay, cool. So I promise I won't bore you too long. Right. So this was an example of how easy it is. You don't have to be a programmer, but to be perfectly honest, like this stuff is really interesting. You can actually, if you had the time, or found the time, learn just enough, or just like follow our examples, like on GitHub, on Darwinex Labs examples on GitHub. Like you can download them and use them as is, and with some basic instructions. And you still don't have to be a programmer. So I'm not sort of saying everybody go get a book and learn something. I'm just saying like it's really interesting to try. And if programming is a problem, you don't actually need to start writing code to use the API. If you have ideas, you can head over to api.darwinex.com/store, that URL over there. And here, you'll need some credentials that you need to write into us at info@darwinex.com that, hey, can I have API access, please? And with this access code, it's called an access token. Once you get that access token, you can then come and use, and you'll get an access token for each API inside the main Darwin API. You can come over here. Our teams have put together this really good API console where each instruction that you'd like to put to the test, particularly, since we're on the filtration subject, let's stick to that. We have some documentation on the page that shows you what each of the parameters that you need to enter, or how to enter them. It gives you an example of the output. But then inserting your access token up here, you can actually run these, enter your criteria, and run these programs, run these endpoints right here using the try it out feature. So you don't actually need programming experience. You just need fundamental interest and knowledge to some extent of how to go about doing this filtering in the first place. So it's not, and if you engineer an idea out of this and you go, wow, I think I've come up with something really good, then you can head over to our community forum where there are developers, I'm one of them, who will like hear your idea out and one of us will do something about it. So there's like a very, now after we didn't really appreciate how vibrant sort of that API developer community would become on the forum until after the beta came out. So we have like 3 or 4 guys coming up with full-blown solutions and tools that one of them I tried to open right now, but it's not accessible for some reason. It's not on our server, it's on the guys, so I don't know what the problem is there, but you can trial your ideas, you can implement your ideas via the API console that we put together without programming expertise, right? So that's there for you to try. If you have programming expertise, that's fantastic. It opens up several possibilities. But if you don't, it's not a deal breaker at all. You can use the API regardless. Other things you can do with the API to come up with new ideas for not necessarily. So we discussed the edge, that the edge of a trader by definition should be somewhat linear over time. And if the person breaks away from his edge, it's clearly visible in his quoting behavior, right? The other example we discussed right now is how can we take behaviors of other good traders and use them to tailor our own behavior based on what they're doing. The volatility example. LVS and THA went 7% up. I was planning on entering. Should I enter? Or LVS and THA went 7% down. I was planning on entering. Should I enter? So both, or that might be a good thing. They might have bought into a trend that's reached. Now you have a better price. Depends on your hypothesis. You can do all of these things as a trader, not necessarily being a Darwin investor. And the third thing is more specific to a Darwin or a certain portfolio of Darwins. Let's say all of these use cases, you do use them, but they don't necessarily apply to you. Can you do interesting things with one particular Darwin? So the API allows you to get in all the information you see on the platform, as we were here. So all this information, the historical evolution of this information is available via the API. So I'll give you an example of how that works. We'll take one Darwin's example. Let's take, there's a Darwin called Uli. And I want to get the quotes, not the quotes, I want to get the scores for Uli. Let's save them. I want to get all of Uli's scores, and I'll tell you why I'm interested in getting historical evolution of Uli's scores. So now I've got all the Uli scores. The historical evolution of Uli in terms of Uli's diagnostics is now visible to me. All the attributes that matter, the evolution of his D periods over time, that is actually a pretty good indicator of how you modify your representative decision making. So it's very, very good to keep an eye on the evolution of D periods. Even though a lot of traders, for some reason, ignore this particular feature, it's a very important feature and a predictor of consistency for a trader. Several use cases here. So you may be interested in particularly one or two attributes, or you might be interested in performing something slightly more complex. Say you have a machine learning background, right? Say you have some sort of statistical risk assessment background, and you're interested in doing some studies where you consider these diagnostics as features in a model that you've come up with. I don't know what that model is, but you may have several, and you want to essentially predict the future movements of this particular asset based on its diagnostic profile and not necessarily its quote profile. Though I can tell you from experience that the quote contains so much information that it's coupled with, I'm sure, the diagnostic attributes. It's a very good, robust data set. But say you didn't want anything to have to do with with scores, the quote on its own, like I said, behavior, edge can be somewhat linear, right? Somewhat, not like that linear. That's clearly overfit nonsense. Edge will maneuver over time and demonstrate clear deterioration or clear expansion. With the score profile, the API allows you to conduct studies on the individual diagnostics or combined diagnostics. Combined diagnostics, of course, you can just visualize the D-score. So if you want a weighted view of what the diagnostics look like, the D-score is an interesting place to, is an interesting attribute to visualize. So if I were to just visualize how these evolution in terms of D-score, then one line for a Python programmer and a few for somebody doing this in Excel will allow us to see how his D-score evolves over time, has evolved over time up until this point in time. If you spot something that represents alpha, If you spot anything in the data this way, the API allows you to basically go through each attribute or go through the entire portfolio of diagnostics from inception, from the day Darwin started quoting. Okay? These are daily. Correct. Yes. These are daily in UTC. On that same note, quotes, where I was talking about how much information does the quote actually have. So we were talking about volatility Darwins again. So one of them I studied before we came here is Darwin LBS. Excellent Darwin, right? Really good bunch of guys behind it, and they know what they're doing. But it's very interesting to see how they correlate to market volatility. They have a volatility base. So if you wanted to quantify their behavior, right? You have a Darwin, but you want something more specific. You want something more tangible. You can put a number on it. If we could do a study of basically, I'd like to answer the question, how correlated to market volatility is LBS? You couldn't do that without the API, right? So to answer this question, I did this study for you before I came here, so you wouldn't have to spend half an hour looking at me ciphering through code with it. So just load it up for you here. Let me explain what this is. So I've taken, I'm sorry it doesn't look too great on this, but essentially I have two bits of data in this study. I've got LVS's quotes from the 9th of November last year up until the March now. And this column here represents a simulation of FX market volatility over this same time frame. Okay, so we have a proprietary method of approximating FX market volatility that we use for several studies, for publications, for our own risk assessment, things like that. So I thought, let me draft that time series of simulated FX market volatility, and let me download all the quotes for LVS for this same time frame and see numerically how correlated LVS is to market volatility. And in Python, it's super easy to do. So all I want to do here is just run a Pearson correlation on this guy. And the answer, which you can't see, is that there is a 45.47% correlation between behavior of LVS and our approximated simulation of market volatility. That's an interesting thing to look at in terms of numbers, right? It's clear. That's not a bad thing. It's just making the obvious more known that we know this guy trades volatility, but if we wanted to come up with something where we want to trade LVS based on market volatility, how cool would that be, right? Like if you created a volatility trading strategy where you enter and exit LVS based on an FX volatility approximation, and you're not even trading the Darwin anymore based on his data, you're trading him based on external factors you think he's trading. So my point is, like, you can explore several creative angles using the Darwin API. You don't necessarily have to be a programmer. If you have ideas and you have the interest, you can treat this whole scenario of traditional investing is hard because everybody's got misconceptions about how to go about tracing it. The good guys know how to trade the markets. It makes sense to invest in someone who has the ability to trade long and short an underlying market successfully over time. You don't have to make the assumption that the person will be successful forever, because edge is more linear than traditional assets. Edge fades much quicker than the bull or bear market of a traditional asset. You can visualize edge deteriorating much faster than you can visualize downturns or upswings in a traditional asset. Therefore, it is much easier for you to come up with creations using the API that can successfully or attempt to successfully exploit behaviors of good Darwins on our exchange for both entering and exiting and in future shorting. So, thank you.